September 16th or whatever the last time we did this shenanigans. I can't remember. Was it the 16th? That sounds right. Hell, I don't know. All right, let's share this little bad boy out on the old stock Twitters and get to rolling. We have a live TA report. And I'm alive. So that's a positive.
It absolutely is.
At GP, at JFDI, SPY, QQQ, and Buttcoin. There we go. Maybe we can get some people come in and actually ask some questions today, because you know, guys, I don't have a lot really. Like, this market fucking sucks. GP, I asked you to talk me off the ledge. I don't know what it was, like 3 weeks, 4 weeks ago. And yeah, I wish I hadn't let you talk me off the ledge. But yeah, no, it's just been a shit show. If you're like the geniuses on the FinTwats, you've caught every move, so you're up like 10,000% year to date. But yeah, Nick, what have you been doing? And GP, it's a pleasure to see you live on your phone.
I'm sorry, guys, my home internet's not reacting today, so if there's any weirdness, it's because I'm streaming on my phone.
Well, I'm on a personal note, I'm getting over pneumonia, so that's the reason why we haven't been on the last few weeks. I've been dealing with some health issues. It's kind of crazy. I don't wish pneumonia on anyone, but I don't wish this market on longs either. Jesus Christ! Every week we've got lower lows here at hotness. We're down 0.5% already. Not 0.75%, 2/3%, reaching out for 0.75% on the S&P right now. B Hanu says, "What's up with crude is rocketing." I don't know. What is up with crude? I mean, it has made a nice little move there. Excuse me, I'll try to cough less. Who wants to tackle that? What's up with crude? What do you guys think of this shit show of a market? I've talked enough.
Do you like the XLE? GPM, I guess I'm asking you. XLE, oil, all that. How do you feel about it?
I think my macro is starting to take over, and the idiots that we have in power are essentially going to cause this. The SPR being completely depleted. These guys doing OPEC cuts. If it's real that the economy is going to get destroyed in the next 6 months to 12 months, then oil dies with it, right? Everything will die. If people can't spend on food or living, then they're not going to be spending on oil.
Well, it's demand destruction, right? Just like at the highest level, it becomes demand destruction.
Yeah.
Here, I'll go. I got back from my parents' house visiting my mom and dad. Literally like 2 seconds before I got on this call, and the conversation I was having with them is like last year, around like the April-May time frame, they had some stuff maturing and they were asking me what to do with it, and I told them not to put any money to work because I was worried about the markets in general, right? And then I had to eat crow for my dad for like the next 5 or 6 months because we were hitting all-time highs. And he's like, "See, you should have put it to work." I'm like, "No, just be careful, right?" So I've saved him a lot of angst over the last 8 or 9 months, but I started putting some of his money to work back in like May, and and stuff that I want him to be long term, right? Like, and literally just a couple of weeks ago, I had him stop putting his like weekly distributions in because I'm at the point where I'm worried that if this market breaks here, it gets disgustingly ugly, right? We're gonna see probably worse than 2000 in my opinion. Everyone's like,
Whoa.
oh, 3200 is gonna be the point I buy, and they're gonna eat crow as well, and everyone's gonna just, it's gonna be messy because, dude, I don't know what's going on, but the Fed looks inherently on a mission to fuck things up, right? Like they're just on a mission. They rolled out in the last 2 weeks 17 Fed speakers and then 22 Fed speakers before that. And they are like, it look, and then you have the administration. This is not the Trump administration. This is the Joe Biden and Kamala administration, who are bottom up, middle out views. So they aren't going to step in to do anything like Trump did in the past, or other presidents have. And like, I find it hilarious that these guys are like, oh, we care about the little people, and Kamala's worth 22 million and Joe Biden's worth 18 million. And these guys don't give a damn about anybody but themselves. But
That's all politicians for the most part, though.
Correct. And I don't want to get into politics in general too much, but it's just more like, there's not much savior here. And if you're looking at what they're doing to the dollar, when currencies do what they are doing now, they tend to break things pretty badly, right? Like it's not, it's bad, right? So
The dollar move has
this
been
is
crazy.
a level that I don't think, yeah. And my personal opinion is this is not a level we really want to break, because
No,
I
I agree
don't
with
think
that.
I don't think we see what everyone else is. Oh, it's like, oh, the fair value is at 3200 S&P, SPX or whatever. That's when I'll buy. And you're like, nah, dude. Like, if we break this level, you're looking at potentially, the one positive thing is the economy. People are employed. People do have cash savings, but it just generally feels like they're looking to break stuff, and that's not where I want to be putting more money to work until I feel like they're not trying to destroy the markets or whatever they're trying to do.
Bearish GP. He said a few months ago we didn't want to hear bearish GP, so there it is. Nick, how do you follow that up?
I'm kind of in the same camp. Like I'm really eyeing like basically SPY 300 to 330 is kind of what I'm looking for, where I'm kind of thinking we see some downside. I'm looking at the monthly SPY chart right now, and we're sitting on that 4-year. We're sitting right on that 4-year moving average.
The 208 week SMA.
Yeah.
Right there.
So whether we see like a real break and we do start to really roll hard, or we just see like some major capitulation is what I am kind of hoping we see. But either way, the 300, 330 level is what I'm watching on the SPYs. The Qs, kind of same thing, kind of that 200 to 235, 237.
The original breakout, right?
Yep, exactly. So I'm just kind of like, I want to see how we start to kind of, how we react when we hit these levels. I think the momentum and the trend is to the downside. So like the only bullish thing that we can really say at this moment is like, are we going to get a rally, and then are we going to get a sustainable rally?
Yeah,
like,
I think
can we put a leg up base for a second and then take that high out? Like until that happens, like I don't know. I have some longs on. I kind of dabbled a little bit. I still have like my VRTX, and I actually have the XLE too, but
but they're coming for it all, dude. Like
Yeah,
look at what they
for sure.
look at what they did to CVS on a Friday, right? Like that was
Yeah,
disgusting.
right.
That's a safe stock. On a Friday, it was down 11%.
Yeah,
Crazy.
Like,
Was there
dude,
news
like,
with
it's
that? I
getting
didn't
to
see
the
that.
Yeah, so like when they're coming after the players and I mean, sorry, it's to me, I'm in the camp that I've always been in, is that we end up holding this like
this area.
260 to 280 area. But
That's
if we
one giant ass
don't,
Batman.
huh?
That's one giant ass
But
Batman on
if we
CBS.
don't, yeah. But if we don't, Nick, I'm not in the camp that 237 holds. We started this free money, like if you look at the
You think
trajectory of all this,
that 150-ish on the Qs is where we would kind of fall, bottom out, because that would be the low end of that range. Like I have kind of like a range on the Qs, or kind of like a small base, that one, yeah, the 190, the 150 to 190 kind of zone.
So just to put that in perspective, that is 9% off the COVID low.
Yeah,
the March 2020 low.
I have 164 at a minimum, because that's a full retest of the entire free money cycle from 2020.
Sure.
So that's
I could
where
see that
have
too.
it. But dude, look at what things are. Or like I was looking at, like, so for example, right, like ROKU was one of the kind of the poster childs of this free money cycle. It has already had an 87% move down, and that was the entire move of Cisco down on the .com collapse, right? Like a lot of the moves to the downside have already happened in so many names.
Well, Bihanu asked about Roku, and since we're on it, it looks like death.
Selling across the board. Yeah. So my thing is they've already taken out so many different names on so many different. We're not talking about 70% down. We're talking about 85, 90% down already, right? Like so
we're talking 89% down on Roku.
Yeah. And that doesn't, so bring up Cisco from 2000, right? To 2001. Cisco was the poster child back then. Not saying that Roku is the poster child, but I think it was a total of 87% move down.
From top to bottom, high to low on Cisco from 2000 to 2003, when it bottomed out, was 90%.
Yeah. So they've already done this, and we still have a booming kind of like labor market and all this stuff. So markets like I'm not talking about our stock market, but like the actual financial markets freezing up, like the access to liquidity, which is already happening, is starting to dry up. I'm hoping that the labor market saves us, but
how can it?
If we break this
well, so this is what I wanted to touch on. How can it? Right. Well, the labor market is stronger than it has been, but how can it sustain if demand destruction across the board is happening? How can it?
Yeah, I don't think it can, right? So like you're talking, and like if we're talking, I was talking to my dad again today, is like, dude, look at what they're doing to the retirees, right? Like the fixed income market, one of the worst performing markets in.
Hey, GP, just a suggestion,
right? These are
for you real quick.
Yeah.
Flip off your video and see if that improves your audio a little bit. I think it might be sucking your bandwidth some. Thanks to Bihanu for the little tip there. Just want to make sure we hear you well.
Okay.
All right. That already sounds better.
Yeah. So my general, like, this is my thought process when we're talking about this earlier this year and late last I mean, like May, April, when I started posting the charts of Amazon and Microsoft and all that other stuff, where I was trying to look at all this stuff on like a bigger macro scale, is that we approach a 2000 type collapse and and sideways for a really long time, and that's not a market that anyone wants to be in. And so like 3200 might come, it might hold, but we're not going anywhere, right? Or we're not going to move. Like, you're going to put your money to work, and if you're trading, that's a different conversation. But we're talking about investing, right? To a point. I'm thoroughly worried about what's going on here. And the price action, I really thought we would get one more kind of hoorah before it happened, but we did not get that. My only thing is that we are seeing some of the crazy moves down already that we had in 2000 on many names, right? And you're starting to see kind of the stalwarts of the market collapse one by one. Not Twitter, Tesla and Apple and dude, they came after CVS. You can't mess with those receipts.
I mean, Shamsu in the chat asked us to look at Costco, and I mean, it looks like it's ready to break down. It's below all of its EMAs. It's got a nice head and shoulders formation, and Costco is one of the best run companies in the world. And from a technical standpoint, it just looks like it's ready to break down. So yeah, I just it's hard to be out here trumpeting and beating the drum for the bull side of things when you look at everything you see and it's not good, especially the macro. And I think we're in an environment where the macro is leading us because it's shit. I mean, it's not good. From war to supply chain, which have been going on for almost a year now, basically, a little more than that, on the supply chain part. Yeah, it's just a really tough environment to be in. The Fed's ratcheted up rates higher than raised them quicker than they have in recent history, which again leads to that demand destruction. We're seeing it in the chips. I mean, AMD reported or gave early guidance this past week that they were going to be $1 billion light, right? And $1 billion light, to a company like AMD. That's not just a throw. Lisa Sue's not in the habit of throwing $1 billion away, right? So there's a lot going on, and none of it's really positive.
I think the smart play for pretty much across the board, unless you're trading like actively. I mean, even for investors, I still think cash is probably the best position to be in.
Which is also losing value at this point at negative 8% a year, right? So but you're also going to get to the point where if they keep raising, this is what I was talking to my dad about, is like if they keep raising rates, and we get to like say 7 or 8% in a savings account, that right there is a big deterrent for a lot of people to put money to work in the stock market, where you have random 30% gyrations. Look, CVS is supposed to be safe. It had an 11% move down. If you're getting 7-8% at some point in your CD and you can lock it in for 5 years, that's what happens to that cash that's available on the sidelines. It gets put away for 8%, and people are just happy making their 8% and call it a day, right? Why deal with the stock market? So you're starting to get to a point where there's a lot of things, in my opinion, get really wonky really fast. Right? So I like what everyone's used to is we get to a level, and then all the buyers show up, and we not necessarily V out, but we start to move up out. And my concern, which has always been, if we break this level, we don't V out, we sideways out after we lose it. If we lose it, we sideways for years, right? Like I don't think it's, and they're doing their demand destruction conversation. I don't think you're going to be able to pull back wages too much personally. So your sticky inflation kind of remains. And
Well, the way
I
you
don't
pull
know.
back wages is the job market goes to shit. So there's more people out of a job. It's not, whether people are losing jobs or people can't get jobs. That doesn't mean that all the workers are going to take wage cuts. It just means demand destruction. That's going to go right along with jobs.
Yeah.
Yeah, and I've never seen what, like, I think my thing is just that everyone's expecting a level to hit, and all of a sudden it's okay to buy. And I'm like, if those levels hit that you guys are talking about, it's not okay to buy anymore, right? Like, it's going to be years before we recover.
Definitely a different conversation between like whether you're talking like indexes, ETFs versus individual equities.
Across the board, Nick, like I don't like Microsoft is a great example, right? Which is why I compared Amazon and Apple. I mean, Amazon and Microsoft together in 2021 in May, right? The conversation was these were the best allocators of money and capital in their respective bull cycles. And they both stepped down at the peaks essentially, right? And so stepping down from a company that was making $100 billion a quarter and growing at 30% or whatever it was is like, it's kind of like, what? That don't make sense, right? Like, so like, it's not a conversation of whether Amazon's going to remain at the top of their game. They're going to, right? They've built an infrastructure that Microsoft always remained at the top, but doesn't mean it can't go sideways for years.
Oh yeah, for sure. Yeah, right.
Right? Like if
Totally.
the valuation conversations where it was trading at 3 to 4 times total sales or total revenue goes to 1 times like Walmart trades like at book value or below book value for the better part of the last couple of decades because their growth is kind of minimal, right?
Yeah.
They're still behemoths. They're still a great company, but it doesn't mean they get the multiple that they used to get. So like I'm concerned, right? I'm legit now concerned. I do like the fact that the NASDAQ composite through all of this, which is the full basket of technology stuff, did not break its June lows after that terrible September, right? And mid-August to end of September, that's 6 to 7 weeks of hell. Did not break. It got 7 points within, and it did not break. And technically speaking, it's got an inverted hammer. And I know people want to say gravestone dojis or whatever it is that they're calling it, but that's an inverted hammer, and an inverted hammer that did not break lows but closed at near lows is one that you want to kind of watch because it could. So this is a technical conversation. This is not more of a I'm worried macro conversation, right? So I have a few competing opinions right now, but I'm worried. I am worried. It's more of a somber approach than the, yeah. It's look at that Costco chart you have up right now, man.
Yeah, no, yeah, for sure. No, I mean, I've been more bearish than I've been consecutively, and I don't know how long. As we close the month of September, I'm still going to stand by this. I feel like it's very important we see how October does. The quarter as a whole, technically, has looked like shit, like, the remainder of the year. Stick saves aren't impossible, and I don't mean it's going to be a V shape. But a strong month of October, which right now doesn't appear the most likely after we're already a week into it, and had that violent up then down move. But there's still hope. Very slim. I would say that's not my base case. But I still think there's a chance to see some upward rally. And maybe not.
Seasonally, we have that. At least we have that at our back right now. But
yeah,
man,
that's
not that it's saying much.
The way I would put that, Nick, is right. It's at least seasonally, it's not a headwind, right? But there's so much macro that is just crap. Not to mention the technicals that, again, wouldn't say a strong rally is my base case, but it could happen. We're going to have elections over with here in another 3.5 weeks. So we could see how the end of October shapes up in the first part of November, but it's not looking great. And I don't disagree with anything that GP has thrown out there on the bearish front, because there's a lot of ugly going on, and liquidity's drying up. Rates are going up. Demand is being, killed. So, Nick, to your point, where is better to hide out than cash, unless you're, maybe playing some bearish tickers, ETFs.
I mean,
to the downside.
I was just saying for investors, a lot of people think we hit a certain level and boom, we're all of a sudden going to bounce. No, that's not realistic at this point either. But at the same time, that's the whole kind of point of dollar cost averaging, is you don't have to worry about picking the top or the bottom. So if you're, 20, 30, 40, 50 years old still, I mean, I would be picking my levels and putting money to work as this thing starts to crater. I have a tough time really thinking too far ahead. I guess I try to think a little bit more optimistically. I'm definitely in the camp, whenever I hear, either Dues or some of the other guys talk about 2023, I'm kind of in that camp. I think that the rest of this year could be continued to be pretty messy, but I think next year is when we're going to really start to see maybe a change in character. I think for growth and even trend traders, I think that you got to just keep refreshing your list, your watch lists. Keep running your scans, because you're right, they're going to come for everything. But still, relative strength is what I want to pay attention to, because when this thing does finally bottom out, I want to be where the strongest fucking stocks are. That's just where I want to be. I think that to GP, I mean, Amazon, Google, Tesla, all of them. It was so I remember thinking too, I'm like, God, all the the Google, Amazon, and Tesla splits, I was like, dude, they are bracing for impact, for volatility. That's the only reason that they're splitting their stock right now.
Yeah, increasing liquidity, right? It was about increasing of liquidity, and
absolutely.
How do you distribute out shares if you only trade 5 million a day? Now you trade 50 million a day, then you can distribute out shares easier, right? It's just science, right? And volatility increases as liquidity disappears, which is why there's a lot. And I was going through I went through, for me, Netflix is one of the ones that it's gonna make or break whatever's happening in this market. We get earnings in 8 days, but 11 weeks we've been in a 30-point range, and it refuses to break out. So I was like, I gotta go read the earnings again, right? So I went through the earnings, and one of the things that they talk about in the earnings is their FX impact. 60% of their revenue is foreign currency.
Oh,
right? 60% of their revenue is foreign currency. Let me rephrase that and look at what the dollar has done in the last quarter.
Yep.
right? So like the impact to earnings is going to be great. The question remains is whether it's priced in or not, right?
Sure.
But
And if it's
but-
not, that's a leg lower.
yeah, it's a leg lower, and I like the volume that's setting up, but where the chat we're having in our group, right, in our Discord, that I was like, man, that's a lot of volume for Netflix to go nowhere, right? Like it would go to 250, 245, and then it would just sell off, right? On
Yeah.
volume, it would go up there and just sell off, and then go up volume again back like about upgrades and whatever. And so
Still
this
can,
is not behaving like it's ready to push higher. So
GP, I don't know if you can see my my chart. I've got volume turned on the Netflix, and
yeah, I see it.
the volume that's come in on the weekly during 2022 dwarfs every other year combined.
Oh yeah, and but the thing is, if you look at the monthly, it's barely any volume, right? Compared to like the beatdowns in the past. Look at that,
Yeah.
right? Like,
Yeah.
And then you can talk about notional value versus actual value and all that other stuff, right? Like we can talk about all that stuff. And you look at the institutional side, they're not selling their positions. They're doing this via options. If you're looking at the flow, and this is what I had to look at in 2022, it's not really something I really pay attention to, because what I think it was on this call that Nick, you talked about, or someone talked about, was they're doing it via options, and they're not actually selling their positions. They're just using options to control the flow, right, of where things are going. This one is the one that I think will shape where we go moving forward.
yeah.
We find out in 7 business days, 7 trading days on the health on the check of our markets here. But like if you look at any of the points in time on Netflix when it's had some big moves down, it tries to fill the gap beforehand, and it just refuses to fill the gap, right? Like, so this is one of my concerns. Costco was the other earnings I went through, and they were pretty optimistic and upbeat on the earnings. I read through and I listened to the CEO go through and talk through the Q&A. It's definitely interesting. They're definitely in a better position from an inventory perspective, from everything than most companies are or have been, like Walmart and Target. But they're still crushing Costco too, right? Like, and if Costco can't survive, there's not much that will.
Yeah.
So that I want to share, I just saw come through on the old stock twits. Galaxy Brain Capital Management just posted
Let's
something
shut the market
from
down.
yeah he just posted something from Reddit, and it says market crash confirmed. Only 3 times in Major League Baseball postseason history has a team come back from more than 7 runs. 1929, 2008, and now 2022. All
Yeah, I saw that
October of
yesterday.
1929, 2008, and 2022. So the 2008 move in October was pretty gnarly. I haven't gone back to look at that 1929, but I'm sure it wasn't pretty. I'm gonna actually pull that up right now.
Oh shit, your data goes back to 1872? Pretty
Yeah,
impressive.
I'm a baller like that.
Ball.
So there is October. That's only quarterly, but there was a little more up left in the tank, at least in October of 29. Sorry, looking at 28. Yeah, that was almost the top. You had just a little bit more before the fall off in the 1930. That's amazing. So there you go. If baseball is an indicator, it's hit 2 of 2 right now. Let's see what will happen in 2022. That's I love the way those things line up like that. That's amazing. Anyway, No one needed to know that, but I just thought it was interesting. Randy, yes. Hey, hi, Randy, and thank you for always being here. We appreciate you. Guess a lot of senior citizens are going to be looking for a job. I mean, this happened to my dad in 2008. He was ready to retire. I think I brought this up before, and he worked a few more years because I mean it was wealth destruction, right?
Yep.
Everything that you had saved your entire working life just kind of goes down the toilet as the market does.
Yeah, I think the one good thing is in this case, we have a ton of people who are locked into 30-year mortgages under 4%, right? Like it doesn't
Yeah,
seem like
yeah,
2008. So you have that one kind of thing, and people have been saving and put money away. And yes, the people who always suffer are the retirees and the people who don't make that much money, right? But
yeah.
ultimately, if you own a house, like this is not from 2000, like if there's a big layoff cycle, then that's a different conversation. But people are in mortgages. I think it was a 75% of mortgages are under 40%, under 4% interest rate. People are just not going to move.
Right,
Like we were looking to move, we're not going to move until rates get better, right?
right.
Unless we find a house that we absolutely love, and then we can talk about it and then refinance in the future, right? Like to make it better rates, but we're not moving now, and we
Yeah, I
own a
mean
house.
it's
And
marry the house, date the rate, right? Like you can
yeah,
always hopeful change the rate at some point. I do think it's crazy to think about. I mean, anyone who's followed us and kept up with us know I just moved, right? And I just went through the whole process of getting a new mortgage and losing my barely more than 2% mortgage, which is fine. Uh, because we took another opportunity here in Georgia. But if I tried to buy this house now, just a few months later, right? Um, less than 3 months later, my monthly payment's going to be about $1,000 more than what it currently is, and there's no way that we could afford this house at that point then, with the two kids and everything else that we've got going on. So it's just crazy to to think like, yeah, houses are, um, you know, people are taking price reductions on their houses, but still, even let's say 50 grand on the price of the house, the seller's deciding to take that off over a 30-year mortgage. That's not putting that big of a dent on the amount of that I'm gonna have to
yeah.
pay on a monthly payment, and it's
Now when
hard.
rates are this high,
It's hard to sustain an extra $1,000 a month for a lot of people, to be able to take that gamble on, well, rates will come down in a year or 2 years, right? Rates might not come down for several years,
Mhm.
and
it didn't.
that's something we're not really talking about. Um, and the housing market tends to be, the last one to really give us a flush bottom, and we're not there yet.
And I don't know if we're gonna get there, to be honest, right? Because I I I don't. This is 2008. People were buying second and third homes and defaulting on the second and third homes that they were trying to flip, right?
No, I don't. I don't want you to mistake. I'm not saying 2008 is going to happen. That's not what I'm
Yeah,
implying by saying the housing market's going to flush from where it was to its high. It's down from in the past 6 months,
oh, of
but
course.
it's not down like the market is down, basically. So what I'm saying is when the housing market really comes to a grind, then we might be closer to a bottom. It seems to be the last thing that gives way before we can see any upside when we reach recession period.
Yeah, and to be fair, right? So this is the bearish me. This is what I've been afraid of this whole time, which is why I really wanted it to hold. And I'm still in the camp that we're gonna hold personally. and we start to recover off this area, and this is closer to the bottom than it is the top. And but I'm also not going to put any more money to work here because I need to see what happens, right? Like I'm not blindly looking at this in terms of we're definitely going to hold. I'm in the camp that we are, but if we don't, then I'm out, right? Like all the stuff that I've bought in May, I'll take my. That's been the
Yeah.
the godsend is like I didn't put money to work in 2021, really, right? Or 2020. I had what I had and it did well, but I've been waiting for prices to come down, and I got my opportunity. And so if I do get stopped out for 10%, it's not the end of the world from, you know, if you bought Amazon 3,000 above, right? So it's it's at a point where I'm like waiting to see, and I personally think we're gonna hold based on what I'm seeing, but then I've been wrong, right? Like I've been wrong about levels holding, and I was right about that 334 being a big freaking rejection, that's for sure. That January capitulation volume crap. But I also thought we'd go back and test 315, 318 and hold, and we cut through it like butter. And that was one of those, the chart looked good, and then that surprise CPI data came out, and that was it.
Yeah.
It was game on. It was literally game on since then, right? Like, so, you know, it's like I'm seeing the setups, but they're not necessarily working out. So be careful moving forward because I'm not too sure people are going to like what they're asking for.
No, they definitely won't.
Yeah. Like, oh, I finally get to buy into this market, and they're going to be the most frustrated ones because they're going to be like, oh, shit, we've been sitting sideways for 10 years now.
Yep.
I missed the entire bull run. I'm finally going to put stuff in. And you know who those same people are? The ones who are going to watch what Microsoft did for 13 years after 2001. And then right when it breaks out, are going to be the first ones to sell. Right? It's the psychology of these charts.
Yeah. You're just tired of it, right? You see anytime to hop out, and you're just tired of it.
And they're going to be the ones who miss the next bull cycle.
Yeah. No, that's fair.
Yeah. So I know people are like, oh, bearish this, bearish that, and I'm like, I see you, I hear you. I just don't think everyone's prepared for what could potentially be coming. That's my personal opinion.
Yeah, I'm with you.
And I hate being like this, and it's not the scenario I wanted when I first thought about this back in 2021. But if that starts to play out, then I got no interest in this market. I'm gonna put my ass in. I'm gonna put my cash into a CD and call it a day.
Yeah. Should be interesting.
Well, I mean,
it'll be interesting through the end of the year. I think
you're getting better than 4% on the 2-year right now. So
exactly.
4% is better than minus 20% all day long.
And that's 20% just on a Friday. Wait till the Monday.
Don't make me laugh so hard.
I mean, the thing I've always said is when we get these types of markets, cash is the only place you should be, right?
Yeah.
Because once things settle down, once things go, you get to think with a clear mind, and you get to put money to work in a way that's helpful for you. If you're in stocks that are paying dividends, I'm happy you're getting your 5%, but you got to be miserable looking at being down 50%.
Yeah. Ain't that the freaking truth?
It's like, oh yeah, but it generated cash over 20 years. I'm like, yeah, okay, cool. Happy for you.
Yeah.
So this is a very, very kind of we need some. Yeah, this is pretty sad. Return.
Yeah, it's just the timing of it, It'll pass.
Yeah,
The
it's
10 years breaking out. I haven't looked at the 10-year. It looks, I mean, it's parabolic, of course, but
I
yeah.
think it's really interesting to see what the Fed is doubling down on, right? This is the same Fed that told us that inflation was transitory, that we won't raise rates till 2024, and instead are rolling out double-digit Fed speakers every week to make sure that you understand that they have no intention of stopping. They don't give two damns, right?
Right.
And that's kind of a scary kind of place to be. So from the chart perspective, I see a potential reversal candle. I see the reversal candle on lower volume, right? So we did have a bad quarter, but it wasn't on higher volume, right? It didn't break on higher volume. So I see potential that we could be bottoming, but I don't think I don't think 237 holds. I don't know if 164 even holds.
So speaking of the Fed, though, right, and the transitory, and like at this point, they've lost, all credibility, right? I mean, how can you look at the Fed for the last year, who, well, yeah, the last year has things are going to get better to things are going to get worse, right? Which is basically what Jay Powell said at what was it, Jackson Hole, which really, that was I don't know what the opposite of a defibrillator is, but that was like a basically shot to the back of the head for the market. So we've been hearing people like Jeremy Siegel, right, who all along the way is like the Fed's behind, and now it's the Fed is doing too much. They've gone too far. We're already seeing this happening, and I'm not saying a Fed pivot from hawkish to dovish is going to stop the locomotive down the tracks, but again, I think it really comes back to all the other macro that's working against whatever the Fed does is not really going to matter so much. I mean, is it going to change that the Saudis are going to supply less oil? Is it, or OPEC Plus is going to, have crude cuts, right? Is it going to stop that there's a war that is ratcheting up to a nuclear escalation point? Is it going to stop, truckers being able to get goods from place to place and in ports of entry, and these goods manufactured? Like all these are still giant hurdles that, regardless of what the Fed does, trying to again create demand destruction, does it matter what the Fed does at this point, or are they just adding more pain to the process? I kind of agree with Professor Siegel in like they're just adding more pain to the process.
So what they're doing is actually inflationary, right? Like it's an odd thing, right? But it's a supply side inflation problem, in my opinion. And rates don't do anything but destroy the economy and the demand. But that doesn't mean the supply side inflation disappears. The sticky inflation disappears. You have a fundamental glut of oil capacity, right? Like that's, so if you're talking about demand and supply and demand, there's not enough oil being produced. There's not enough oil. Like the reason they've been able to maintain the oil not going bananas is they've released their SPR, right? And we're nearly depleted on the strategic petroleum reserve that was enacted during the last inflationary cycle to stop us from having inflation problems and being controlled by other countries and stuff like that. And we're nearly through it. So yeah, there's a lot of stuff that it's it's going to be an interesting 6 to 12 months, if not longer.
Yeah. Exciting though.
Yeah, and like honestly, like this is probably where if it does break, and the acceleration is where you can probably make a lot of money buying puts.
Yeah, for sure. Fast too.
But so far puts have actually underperformed if you aren't a zero DTE trader,
Yeah.
right? Like
Yeah.
that's the example I gave last week. I think is like in January, if you decide to buy December SPX 3,500 puts, saying that the market's going to die, you were underperforming that day. You were down 15% for a 25% move down. That's embarrassing, right? Like, if you,
It's kind of crazy.
yeah,
The whole thing is kind of crazy.
yeah. So that's the thing. Volatility hasn't outperformed the market. So unless you're that zero DTE trader, if you're a passive investor who bought protection on the portfolio, you're underperforming that perspective as well. So like, not only are you getting crushed in stocks, but you're also getting crushed in your protection.
I mean, you could be swinging Bitcoin from like mid 18s to 20. That seems like a profitable trade for the last, I don't know how many weeks.
Yeah, that's true. Yeah, Bitcoin's the kind of the canary in the coal mine here, right? It's not breaking down. It's been holding up, and the markets aren't breaking down here. So like my thing is that
We've got increasing volume on the weeklies too. So
yeah, and if we were gonna break, we would have broken, right? If you look at where SPX
well, we could break at any time. It's one of those things that you're treading water till you're too tired to tread water, and then you're fish food. So the fact that it's not being able to get over that 24, 25 area is a positive. I was just saying trading from 18 and a half up to 20 has been profitable. But yeah, I mean, it hasn't broke down. But it's like, every time it doesn't, like it's just waiting for that leg down. The volume, which I never look at, and again, just for anyone who's new to this conversation, I only pull it up because GP has such a hard on for volume in general. So there is increasing volume on the weekly chart. Just throwing that out there, GP.
Yeah, and it's increasing to the upside, right? Like
yeah, it is. It is,
and it's not moving anywhere. So to me, that's accumulation. If you're looking at some charts, right? Like I was looking at the Etsy chart. I think that Etsy chart looks great.
Bitcoin against Ethereum, like ETH's volume is up week over week, but they're not as much as Bitcoin's. I want to pull up the ETH versus Bitcoin chart. Yeah, ETH might be breaking down. Actually,
I think they're gonna annihilate them both.
We know, Nick, you've been in that camp for a long time.
Yeah, I know. Sorry.
No, it's okay. No, I appreciate your contribution. Seriously, I do, Nick. We GP and I, we're very much more long-winded, and I didn't mean to cut you off like that.
No, you're not. I mean, there's only so much I can ever really like. I like to look at charts. That's about the extent of my. I try to really just hammer into that and try not to think too much.
Yeah, and
thinking gets me in trouble.
Nick, it is not altcoin season.
It's the same boat for me. I'm letting the charts guide me here. I'm not arguing that, but it's hard to ignore some of the stuff that they're doing and conversation. So like it's important for me to also have that view, because my initial view back last year was that we're going to have a 2000 type collapse, and here we are very close to it, and I'm like, shit, I don't want to be right. Right? Like I don't it's the one time I don't want to be right.
So over at Charts for Charity, we've used The Economist as basically the their covers as sort of the contra trade, whether it's the tech bulls running or whatever. Whenever the economist does something on their cover, it's been wise to go the other way. Well, October of 2022 for Barron's has the powerful greenback with George Washington flexing. And the last time that happened, the Economist did it in 2016, which is funny because according to All-Star charts, the dollar peaked a week later. So, I mean, we were talking about Dixie YouTube chat here for a minute. I mean, that sucker is parabolic, and I'm still watching for, we might be getting some negative divergence on the RSI there for the dollar. But as it seems to say multiple times a week on Stock Twits, overbought can stay overbought and oversold can stay oversold. So you never know when these things are going to end. You just have a good opportunity of maybe knowing when to look, right? It's never a perfect call, but at least maybe you have some idea when to look. So anyway, our friend Anchors Away shared that a few minutes ago.
And the dollar does look like it's close to finally taking a break, whether it's an actual break or like just a consolidation sideways before the next leg higher is the one I'm not sure about. But that right there you go. There's your inverted hammer right on the weekly.
Yeah.
There's your gravestone fucking doji, whatever you want to fuck.
I told you stop making me laugh.
Right? That's what, like, the technical side of the conversation. People just keep like, oh, that's a double top. No, guys, double tops happen in uptrends. It's part of an overall reversal cycle. Like, stop calling double tops and these patterns that are distinctly made for ends of cycles, right? Like, this is not, sorry, like let me not. I'll stop.
The more GP goes, the more we get him fixated and entrenched in the bearish position.
And it was the same thing on the way up, right? For the last decade, people were calling these bullish patterns and they were working out. I'm like, what are you talking about, right? Like, this is not what you think it is. I'm happy it's working out for you, but these are bad habits, right? Like, these are fundamentally bad habits. And when you're just sitting there calling patterns just because they're patterns that seem to be working in the trend that it's holding, does not mean the pattern is what you think it is, right?
All right, here's a question for you, Nick, from Randy. If positioning is so low institutional, where is all the selling coming from?
If what?
Randy says, if positioning is so low institutionally, where is all the selling coming from? I don't think positioning is this, and Nick, you can jump in on this. You probably have better insight, but I don't think positioning is so low institutional. I think they have positions. I think they're low on new long positions, but interested in your take, Nick.
Yeah, I guess that would probably be my guess too. But I guess, I mean, wasn't what GP was talking about in terms of like selling using options? Oh, where's the selling coming from?
Yeah.
It's just the regular order flow, right? Like, that's, it's.
I mean, that's why we get these normal gyrations, the up downs, the bear market rallies, etc.
Yeah, and
the bear market rallies are really the opportunity to probably lighten up positions, or I don't know.
And you can go short, right? And the only time you have to buy is when you're covering. Right. So that's selling.
Let's talk about Netflix, for example. It is still 77% institutionally owned, right? Like, there's still 77% of the shares in Netflix that they can distribute out. So they might have been distributing some of that this quarter. We don't know until November 15th, because they have 45 days to file and all that nonsense that they should tell us immediately. But why would they do that? Because that would give us any form of an advantage. But Netflix is still 77% owned, even down here. So you have a lot of potential liquidity on the downside, right? Like it's people could just be like, I'm out, I'm done, and they could sell, and you could see waterfalls. So it's not like, and it dropped from 82%, I believe, to 77%. You know,
So
on
if
this
inst-
cycle
so
now.
so if the institutions decided to really start unloading positions, it could get really fucking nasty.
And at this point, why would they? Because they're still up
Yeah,
tons of percent, right?
Right.
But if the market does start to break down, you start seeing some of that liquidation start to form, right? Like that's the stuff that we got to worry about, because if there's a
Sure.
fundamental
Yeah.
shift in how these guys are seeing where it is, the distribution is coming.
we
And
got
it
about
gets up.
3 to 5 more minutes, guys.
Yeah.
I
Like,
was
so,
just poking around. I was just poking around at some charts. Like I just ran like Baba. I mean, still trash. You know, I go to BlackRock. I mean, BlackRock earnings this week. Earnings season starts this week, but for all the home gamers here, BlackRock looks like a flaming pile of what. Berkshire. Berkshire's actually held up better than most, but golly, it looks like it wants a leg low.
Has someone not drawn a head and shoulders on that pattern, saying, "Oh, look, it's a head and shoulders," and then it works out? Like, look, I told you.
Yeah.
Look at Citigroup. Look at Citigroup.
Look at Canopy Growth. Oh
Yeah,
my God!
$2.
What a week that had. Went down 25%.
Pull up Citigroup.
Shitty bank.
Oh, that looks bad.
Yeah, they had a great week a couple months ago, and all that's gone. I mean, cities are reaching for that COVID low already, right? Well, let's pull, Salesforce, just bad. Looks awful. I mean,
but then you see things like Etsy, right? Pull up Etsy. That weekly, that looks pretty powerful.
I mean, it doesn't look as bad.
It looks like it's going higher, and this is what I was talking about earlier this week.
Bear flag until it isn't.
That's not a bear flag. That's breaking out of the consolidation flag, in my opinion.
Yeah, it looks like a little cup and handle, actually.
Yep.
We'll
Just
see.
a kind of a diagonal neckline.
Maybe it is. Maybe it is. Maybe it's not.
Oh well, nothing has been what it has been, right? But there's
it does look cup and handle.
Decent accumulation on the weekly here. It's one of the few social kind of stocks that has not come back to the COVID lows, and it's held pretty well for months now. What I like about this is when all of this started, it was based off of Snap. Do you remember that?
Yeah.
Right.
God.
And so
Snap's got to be. I was going to say it's got to be single digits, but it's almost single digits.
No, but this is actually looking decent here, right? Like Pins looks great. Pins looks really good too.
Really?
So, well,
I mean, it looks
compared to where
better
it was,
than most.
no.
Yeah, it looks better than most. I'm not going to just try to argue for argument's sake.
As in, like, comparing the recent. I'm not talking about.
Yeah. No, I got you. Goldman Sachs, Bihanu. I mean, it looks like the rest of the financials right now, like hot garbage. This is an inverted cup and handle, which is not a bullish formation.
No, but if you look at Hood looks good.
I mean, it looks better than others, technically.
That's an
I'm not going out there and saying anything looks good in this time.
No,
you pulled me off the ledge once. You pulled me off the ledge once, GP. You're not going to fucking do it now.
I mean, look, ARK hasn't made any new lows. ARK has not made any new lows since.
You know what looks good? Marathon fucking Petroleum.
No, see, to me, this looks like distribution in this chart, right? Like
Yeah. I'm being facetious.
so like the other ones that look good to me.
Moderna finally looks like a really good short.
You know what? Gold looks good.
Gold.
Nick, we are finally getting the move.
Gold bugs.
The fake breakdown.
It
I mean, that's all I can see is Batman.
161. Yeah.
Go for it.
Oh, I know. I was gonna say I'm on gold. I'm watching last month's high. I'm sorry. So that 160. Let's just say 161. Let's just say 162. That's my entry. Through
No,
that.
I like we've talked about this multiple times. There's no rush on gold, right? It doesn't
For
go
sure.
parabolic. It slowly kills you both ways.
Absolutely.
But what I saw was the false breakdown on the monthly, right? That's
I mean, if you don't lose your money trading gold, you can just trade the miners and they'll absolutely fucking money.
Get you some pager duty at $22 a share there. Pager duty. I made some nice money off pager duty, so I'm not gonna knock it too bad. Hey, you guys got a couple more minutes? I don't want to just end it because we want to end it. I mean, we're going.
Let's finish that talk on gold though. Or were you finished, GP?
No, like I think gold had the false breakdown that I was looking for, and attempted to reverse. It's something that's on my watch list here because if it behaves as it did in 2008, where it did have the same false breakdown, it was the start of a multi-year move on gold, right? So I think at that time it went from like, I don't know what, 700-800 to like 1800 or something like that.
Yeah, that's what it's looking like.
So that's kind of what I'm watching here. I honestly am thinking about the Mary Jane space, to be honest, is because they're pretty low in general and they act like crap. Don't get me wrong.
MJ 511 a share right now.
If we're talking about macro, pardoning all the federal crimes is pretty huge in the step that they could potentially legalize it federally. And then one thing I saw this weekend that I thought I'd never see is North Carolina of all states is looking to legalize marijuana. And
really,
to me, that's huge, right? Like that's red, right? Like it has pockets of blue, but that's a red state. And if they're thinking about legalizing marijuana, that says a lot about where this could potentially go. And it's not going to be in like a day or two, right, Nick? This is
right.
You're talking about multi-year cycle.
Yeah. No, I mean, I ran that trade really well back in 2020.
Yeah, no kidding.
They came after solar hard last week.
Yeah.
Well, I've been waiting on that. I brought it up a few weeks ago. I was waiting on that first solar short, and you're getting a shot at it right now. So TAN in general looks like they want to tear it down. They've already taken TAN down more than they have for solar, but yeah.
So maybe just buy gold on the XLE and then hit the beat.
Buy gold and weed.
And weed. Yeah.
I don't like XLE. I don't like XLE. I can't, right? Like I'd rather buy gold and then.
This is not financial advice, but buy gold and weed and get you some, get some chickens and some goats and buy plenty of ammunition
and land.
There you go. Well, I'm presuming that you've already got land before it got, at an 8% interest rate.
Yeah, there's a lot, right? We're at like the point where things could go really sour. I honestly don't think that's gonna happen, but I'm watching.
Randy brought up Wix. He brought up the Wix chart, and it actually doesn't look too
I
bad.
haven't looked at Wix in so long.
Oh,
Yeah,
it looks like it got to a point where it was trading at book value, right? Like it was.
yeah,
It's a acquisition target here because it just becomes ridiculously cheap. Donkey Kong, sorry, DraftKings, similar. It looks pretty damn good.
yeah. You can make an argument for DraftKings here.
Go to the weekly, right? You'll see that there's a lot of accumulation happening on the weekly.
Yeah. Let's pin that doing.
Not anything.
I think probably risk wise, I think if you're putting on trades right now, you might as well size risk like the position's gonna go to zero.
Yeah.
If you're
Yeah.
not sized like that fucker's going to zero, you're too big.
Yeah.
Yep.
I agree with that wholeheartedly, Dan.
I'm not, and yeah, we're not saying zero.
Randy
either.
says don't buy weed, buy hash. My kids love hash browns. And with that, we're going to call it an evening.
All right. Hey, I gotta go
Guys,
anyway too.
it's great to talk to you again. Hopefully we can do this next week and I continue to recover. But hey, Randy, Bihanu, thanks to you guys for joining in. Thanks for the watchers who are lurkers and don't comment in the chat. That's cool. We appreciate it. Rig, thanks for listening. We appreciate you too. But guys, it's good to have you back. It's good to be back with you. And